Hi, I'm Tanya Wolf.
And I'm Michael Waits. Welcome to the Moneymakers podcast, brought to you by Sophia. Sophia is an exciting learning platform for women with a goal to increase diversity and inclusion in early stage investing. This podcast is a finance, innovation, and investing show for amazing women everywhere. Each fortnight, we will feature an inspiring woman from the investing and finance sector or a female founder with a special focus on Asia. Our guest today is Kate Brodock, CEO of Women 2.0 and founding partner of W Fund. Kate, it's great to have you on the show. How are you doing?
I'm good, thank you. And I'm excited to be here.
It's great to have you. Why don't we start with a little bit of your background for some context, and then we can kind of jump into the rest of the conversation.
15, 20 years or so in the tech startup space. Primary initial focus as practitioner, sort of COO, CMO stuff, but obviously jack of all trades as well, as it often goes. I'm not one to sit on my laurels, so very quickly also got involved kind of in the community. I, quote, grew up in the Cambridge, Massachusetts, right outside of Boston, that tech scene there, just as it was sort of nascent and growing. And got very involved in the ecosystem, generally speaking, in startups, and then also very heavy focus on gender and representation in this space. So as my experience grew, I became involved in leadership efforts around women in technology and entrepreneurship. I was part of, and then for a couple of years, ran a global organization focused on just that. At the time that I stepped down from my role in 2015, we had about 60 chapters around the world. So really, really fulfilling work as I was also, just in the tech startup space. About 6 years ago, I was able to combine those two sort of parallel paths. And I acquired a for-profit for good out of Silicon Valley, Women 2.0, and was able to kind of take that and structure it in a way that I at least thought from my past experience was going to be able to kind of hit this nugget of representation in this space. So we have one bucket of programming that focuses on individuals, mostly founders. About 75% of the work we do is with founders. So that's everything from accelerator programs, pitch sessions. We have a whole bunch of other programming workshops, all that good stuff. And then the other bucket, which is just as important, I honestly would argue more important if you think about it, is really making sure that the ecosystem is moving forward in a way that's going to support these great founders. If it can't do that, all the work we do with the founders is for naught. So we train women angel investors, we do targeted DEI work inside the ecosystem. We focus on capital access and hiring platform, that type of thing. And then we've got a big media property out front. And so I've been doing all this work for, thousands of founders for years, just about everything except for writing out equity taking checks. And so at the beginning of 2020, myself and a colleague of mine who I've worked with on the community side for a while, Allison Capon, who has run a similarly focused organization for 10 years, we started a VC fund. And we joke a little bit that it would have been nice if we started it 5 years ago because we'd have equity in some great companies. Right. But here we are now able and so excited to be able to write out checks to some of these amazing founders. We have written out 12, actually one just got approved, 12 checks to 9 amazing companies so far. And that's only the beginning.
Kate, can I go back to this thing you said earlier about the startup ecosystem in Cambridge? You're talking about Cambridge, Massachusetts, right? Are you talking about all the
Cambridge,
stuff that
Massachusetts.
All the stuff that grew up around Route 128 and stuff?
No, actually. So just after that, because there's a big biotech scene that has been around for a little bit longer in Boston, and software firms and that sort of thing went out there. At that same time that a couple of those companies like Citrix and those type of thing were growing out on Route 128, right outside of MIT was a growing tech startup scene, which is now, I was there when it was like a 1-floor sort of innovation center, and it is now taken over all of Kendall Square. there. So yeah, it's a really, really cool ecosystem to have, quote, grown up in, so to speak.
Are you from Massachusetts?
I'm not. I'm from central New York. Okay. But I do still have my 617 area code number, and I'm never giving it up.
Good for you. So. I wish I still had mine. But I think,
God, I love it.
Yeah, I think there's a historic reason, obviously, why all of this stuff was happening, not just in Cambridge, but on Route 128. Obviously, the concentration of universities there, right? Even before what was going on in Silicon Valley, you had companies like Lotus 123 being built by Mitch Kapor in Massachusetts, and kind of switched to the West Coast. I'm really curious for you, like what your reception was when you started doing this. You've been at this for a long time, and I love that.
Yeah.
But when you first started 15, even 20 years ago, when you walked into a room as a young lady, what was the reception that you got, and has it changed over time?
Well, so I had a very lucky circumstance right out of undergrad in that my first two bosses at this tech startup space were women, just about the only ones in the entire incubation center. And that was luck. And I'm so thankful for that, because that provided me with some really great role models. Amy Salzhauer and Maureen Boyce. Right. They were awesome. And really at the beginning stages, and this is actually, I love your question, because it really speaks to kind of the way that these movements and issues move forward. At the end of the day, we're talking about a social movement. And so at that time, what the activities mostly were really community mobilizing. So we were providing opportunities largely outside of the workplace for women to come together. They could understand that there were other women in the community as well, instead of sort of sitting in their office. They could start discussing some of the issues. They could start working together, empowering each other, mentoring. All of that stuff gets going when you have community mobilization. Yeah. We actually saw that again as we started expanding our chapters globally. I still remember when we went into Milan, Italy, and it was just this opening where the women were like, wait a second, there's another woman in technology in Milan. But it was so powerful, right? And that's what they needed. And so that was really the beginning of, in the US, in a couple of target cities, that was really the beginning of the conversation, was community mobilization. And then around the early 2010s, my big shift in thinking was the realization that for all of this community work, we were getting sponsorship checks written out by some of these large tech firms, normally out of their corporate social responsibility groups, right, and to support our community efforts, but nothing was happening inside of these workplaces. All the normal people that you can think. And so that to me was a big flash of realization of saying, wait a sec, we're not doing everything that we need to do to actually make an impact. And it really started shifting, at least for me at that point, to focus a lot more again on the workplace structures and the true ecosystem that was capitalizing founders and employing people in this space.
Sorry, I have so many questions about this. When you started going outside of the region in which you lived, and then even started going global, did you notice kind of nuanced and subtle differences in the sort of issues that people were facing? I'm really curious.
Yep, absolutely. And that's one of that was one of the most interesting things, to be honest with you. The approach that we took was, for anybody who went through business school, is the classic template but localized type of thing, where you can draw some parallels and certainly learn cross chapter in this particular case, but then you really had to be nuanced and, as you said, and localized once you got on the ground. I just used the example of Milan. Right. Their issue was mobilization. They really had not developed a community at all. You pop over to, that was, again, very different from Silicon Valley, who'd been mobilizing for years. And their real issues now, as at the same time, were a much more developed ecosystem where the capital access was starting to get realized as a huge problem. And so, you know, and sometimes it was also, you know, to your question, sometimes it felt like a little quote catch up, is that sometimes you felt a particular ecosystem was maybe where a more developed ecosystem was 5 or 10 years ago.
Right.
And so there were some parallels that you could follow, so to speak. But yeah, it was definitely very nuanced. And as you can imagine, if you get into, you know, areas like the Middle East, you're dealing also with perhaps some cultural issues around what was happening and how women were able to access some of these things and mobilize and that type of thing. So yes, definitely nuanced. And I think that's a super important piece of the puzzle.
Yeah. And so you mentioned this a little bit, that like people were surprised. They'd walk into a room with another woman who was a geek and they'd think like, wait, you mean you care about this too? Do you think that was universal as well, where when you had these initial meetings, people would just be like, I didn't realize everybody cared about this thing so much?
I think that was the case in, again, sort of some of the less, where the community was less developed. In other places, it was more of a formalization of connections that had been made. And again, sort of like pulling together the efforts. And in a lot of cases, just starting to kind of talk about these issues.
Right.
So it kind of went from, if you were to look at an individual location, generally speaking, you have like mobilization that then moves into issues awareness and education. And that then ideally moves into action, so to speak. So that's kind of, if you had to really simplify it, generally what you would see.
I understand. So I've been involved in a bunch of situations where people are raising their first fund. It's practically impossible no matter who you are, right?
Yes.
But it must be even harder for you. I'm just curious what that whole process was like. So I think one of my theses personally is that everything's a conversion problem, right? In other words, if you think that everything converts at 2 to 3%, you have to ask 100 times to get your conversions. But what does it look like to you, and what was your process like for going out and raising money, particularly because you'd been involved for 15 or 20 years already?
Yeah, well, that last thing you just said was super important to us. And so, yes, for numbers game is not a joke.
No.
So like hundreds of conversations. For us, I talked to a lot of people before I went out to raise a fund, for the exact, you know, to try to get my head around exactly what you're asking is, what is this going to realistically look like?
Right.
And feel like, and are the economics going to make sense? And, you know, am I going to be able to pay myself, you know, all this stuff. Right. And two things that we put in place were, number one, we knew we had a unique opportunity with the community that we've already had for 15 or 20 years. And a couple of very specifics is, because we'd been around for so long, first of all, we had already baked in a lot of supporters of the mission because we were doing it. And so this was just a shift into, you know, hey, let's support in another way. The second important piece of that is that because of the work we've done, we actually had this really nice set of professional women who had been with us for several years and had in their own professions become successful and in control of their own assets. And oftentimes they want to be putting those assets to work and then also be putting it towards a mission where we already had that connection.
Right. And
so that was a big target for us. And then with that, we are on the rolling fund, AngelList's rolling fund. And what that model is, just super briefly, we chose it specifically for our first fund. We will not be using it in the future, but it's perfect.
Yeah, for the first
it's essentially, it's essentially, you could use it for 20 years, but it's essentially, think of it as quarterly mini funds. So every quarter is its own fund. And basically, our investors can subscribe to a certain number of quarters. They therefore get exposure to the deals we do in those quarters. So a little different, but still same still same concept. It's a VC structure. And what that has been able to allow us is offering people a lot of flexibility in how they invest with us. So we can have somebody come in who's never invested into VC before, which is a large portion of our target, which is another good thing. We're not fighting over Silicon Valley LPs. And we can say to them, hey, why don't you step in for 4 quarters? You'll get exposed to probably 12 to 15 deals, and will allow you to get comfortable. We actually train our women LPs in angel investing as part of their engagement with us. We think that's super important. And then they can extend it, they can increase it, they can kind of, move forward with us at their own pace. So that's been, I think, really beneficial to it. I will say it makes for slower fundraising, because we're generally getting, we're generally getting smaller check sizes, but we do have a pretty exceptional yes rate. And Allison and I are both working now on getting in, some of the larger checks that'll really, clip us along.
Yeah, but you've also gotten around this issue of what's your track record, right?
Right.
And it's a really innovative way to do that. Sorry.
Oh yeah, that is such that track record piece is such. We have gone through this track record thing, because that's the thing. To your point, Michael, it's like that's the thing everybody asks, right? What's your track record? And they want to see it on paper. So yes, number one, we were able to write checks our very first quarter. They weren't big, but we were able to get them and announce them and that type of thing. And then the second thing that Allison and it took us a while to get there, but we really leaned into the fact that we have a very unique advantage in the fact that we have, not since Me Too, not in the last 5 years, we have 15 to 20 years doing this work with these founders. Like, we are founder experts, and we have been able to tell that story in direct relationship to track record, because as I sort of mentioned in my introduction, like, we've done just about everything for these founders that you would do as an investor, except writing out an equity taking check. So we really leaned into that pretty hard, and it's worked.
Yeah, and it had to show your discretion as well. In other words, it had to show your choice-making ability, because you didn't help every single founder. You helped the ones that you thought were the best, right? So that, in a way, is your track record. And I've always felt, and again, tell me where I'm wrong here, right? Because I'm not always right. But I've always felt that track record was like a convenient excuse. It's almost like you can't wear flip-flops into a fancy bar. It's just like, I can kick you out if I want to, kind of thing.
Yeah, it's so funny. In one of our women in VC circles, and actually Tanya, I know you're a part of this. I don't know if you caught it. Last week, this was literally the conversation, which was, hey, I just got a no from an LP, and they said it was based on track record. I think there was another one. And the whole stream was literally like, just another excuse, just a convenient excuse. Yeah. So yes, I hear you on that.
I don't know if it's just an excuse, though. I think sometimes they just don't know how to deviate from the thing that they've always done, right? They just don't have the capacity to think in that way. It's mind-blowing.
Yep. And I think you're right. It's like the only thing that they tie to risk management is your track record. And that's the tough thing.
Which is ironic, right? Because when you look at the statistics of first-time funds and how they perform in comparison with, second, third, etc. type funds, they outperform. So it absolutely doesn't even make any sense.
It doesn't. It makes no sense. We actually have, Tanya, that stat on the first page, on the second page of our slide. So good. Just in case.
Just in case. Yeah. But still, they will still come back. I mean, we also had the same stat in our slide deck, and get to the end, and they would still say, investors would still say, well, come back when you're on second fund, because, we can't see your track record enough. Well, And I always say the same thing. Well, there won't be a second fund because how do we get to the first fund?
I know.
I mean, a number of your LPs must have been so far must have been first-time LPs. Is that correct?
Yeah, we do have a good proportion of LPs, although we do have some very great, well-seasoned LPs as well. But I would say new LPs probably makes up 40% of our fund.
Okay,
which is a decent amount.
Yeah, it's huge actually. And I think that it allows for, because when I'm listening to you talk about the way you are thinking about the fund, and I'm a massive advocate for the way you're thinking about, the types of companies you want in your portfolio, which I know is also, slightly non-traditional, and where you're getting your LPs from, and the way you're thinking about just the thesis of the fund is very different to some of the traditional funds. And I think that when you're obviously spending a lot of time with first-time LPs and you're giving them an education in a way, you're less 40% of your LPs are therefore not turning around and saying to you, oh, this is too different from A, B, and C fund, because they've never done it before. Yes. So they're, you're teaching them a way and they've got nothing to compare it to, and therefore push back against and say, well, this is too different. Because I found that as a big problem with fundraising for, trying to invest into women. Well, why would you do that? Why would, well, we're not just looking for one unicorn in our portfolio, which I think is another thing that you're also looking to build out a portfolio of, many successful companies. Is that right?
Yeah. Yep. Absolutely. We also don't take that lightly. Like, we spend a lot of time with potential LPs. We take the fact that we're taking and investing other people's money like very seriously. And so we're talking to LPs as much as they need us. I mean, I've talked to some LPs probably 10 times gladly, so that I know that they're also making responsible choices. Some of the math with the rolling fund, many other people using the rolling fund will allow LPs to come in for one quarter. Mm-hmm. And to me, that's like, for new LP, that just doesn't feel, that's not what they're coming to this asset class for. And so we have a minimum of 4 quarters. Like, we just don't allow people in before that. And that's for the LPs. So we really try to work a lot with them, but then educating and making sure they understand it, and then are therefore not only just trusting us, but also feeling good about that investment.
Right.
Yeah, absolutely.
What kinds of things are you teaching about angel investing? And is it sort of a structured course, or is it more just like answering questions and an FAQ and stuff like that? I'm really curious.
No, we have a structured, and just to clarify too, we're not necessarily using that course in the lead up to get an LP. It's more like, once you're an LP, we actually have like a 16-hour angel investing course. And so we offer our LPs that access to that course for free. It's also a course we use in the Women 2.0 community to train just general women on angel investing.
Right.
So we just sort of combine the two efforts. But yeah, it's a formal, like, pretty deep level angel course. And then we've got an angel group kind of obviously built kind of around it, where we graduate, so to speak, into investing and all that good stuff.
And when I come out of that course, what do I know?
We go over, like, some of the topics that we go over are the quote basics, term sheets. What's an effective due diligence process?
Right.
How can you expand your deal flow? And we also talk about things like personal branding as an angel, because that's important. And so those are, it's a couple of like that. It's best for people who are just about ready to kind of, actually do it. They probably thought about it for a bit and they're ready to do it. Maybe they haven't made their first investment. And then all the way up to people who've maybe made, 5 to 10 investments, but still maybe they've followed a lot into an investment, and really want to get that more deep level knowledge of the whole process.
And do you find that the people that come in, this 40% that are first-time LPs, that they're having a positive experience? And if they do, are they then sort of, I don't want to say a sales force, but more like ambassadors for you in the sense that they bring more people into the fund or into the fold, really?
It's a good question. The first part of that question, yes. So far, everybody has been very happy. We've had 2 people that have stopped their subscription. One of them was literally because she needed to divert her funds to her family, her parents and that type of thing. And the second was planned. So she had come up on her time. She said, listen, I'm going to do this for a year. She had it very planned out for her capital allocation. So that was not I'm not pleased. And everybody else has stuck around. The second question is something Allison and I are trying to not formalize, but take better advantage of.
Yeah.
Is we've had 1 or 2 LPs who've been really awesome on exposing us to other opportunities and making intros. And I don't think that it's the other folks don't want to. It's that we need to crack the nut of either getting them engaged enough or really precipitating that so it's not kind of a one-off, once a year type of thing. And that's actually something we're working on right now. But I do think that the possibility exists in our LP base. The enthusiasm is there. We just need to be a little bit better about it.
Yeah, it's a really interesting question for me, right? Because even if they want to do it, maybe they don't know how to do it properly, and maybe they're concerned about saying the wrong thing so that they can't set expectations. I have this all the time, right? So I've thought about this where word of mouth is great, but you can't manage it properly, right?
Right, exactly. Yeah, exactly. And there are also, some investors don't, they're private about what they do with their money. It's all that sort of thing. So yeah, some of those nuances we have to kind of understand and learn about a little bit more, I think.
Yeah, that's actually also really interesting. I've tried to do an angel podcast and nobody wants to talk on it.
The angel networks are so interesting. And it's funny, I have that exact conversation with founders all the time, when they're thinking about pre-seed funding round and there's this angel thing and they're like, what do I do? I say, well, it's a hard group of people. Number one, to get your head around, because some people you can't Google. You can in some cases, but some people don't want anyone to know that they're angel investors. And then you've got these angel groups that are all function differently, and some are formal and some are. There's no clear, distinguishable, universal path into that. It's yes, you are right. It's a very interesting group, a collective of people.
I think so. Kate, you also mentioned that you have a media business that you've built around this. I'm very curious about your opinion on media, controlling your own message, and what type of media you're using and why you're using it.
Yeah, so the media that we've built around Women 2.0 is obviously, as you can imagine, specific to the issues around gender representation, sort of in the tech space, but we definitely get out of that and talk about, society and other. Of course, tech is the horizontal. At some point, we've got to stop calling it the tech industry. I just don't know what else to call it right now because it's in every industry.
It's industry,
but
basically,
I don't,
but yeah.
I know. I keep trying to use the term tech adjacent, and it just doesn't feel.
I was going to say that.
Good.
I was going to say adjacent, but I was like, Dad, don't do it.
Yeah, it's so funny. I'm like, it just doesn't ring that well. So I don't know. So yeah, we'll all someday figure that out. But and so we definitely have what I would call loosely agendas with that message or with that platform. Some direct, some subtle. It's funny, we're actually going through a large rebrand right now, launching in January with a new name and everything that's just in line with what you're talking about, which is controlling
your message.
The message and controlling a little bit of the audience reach as well, which was part of what we thought about in there, because we want to be able to reach certain people. And we frankly knew we couldn't do it effectively with the name that we have now, which was named in 2006, as you can probably somewhat tell from the name. So that is, I think it's a really important thing, and being able to then push that out into the spaces that it needs to be pushed out into in this particular context is really important. And we've thought a lot about that. I've been able to bring in my, a fairly strong background in content marketing when I think through that too, is I really thinking through our programming and again, who we're talking to and what it's about is important. So, it can be very powerful, I think, if you do it right.
Yeah. I mean, that's one of the reasons why I love this medium, right? And I always say to people, if you're not controlling your message, somebody's controlling it for you. So you may as well do it yourself. Yes.
Yeah. I love it.
The Moneymakers podcast is brought to you by Sophia, the place for women to learn, invest, and change the world. Sophia is an education platform for women, providing much-needed courses on personal finance and investing, with a goal to increase diversity and inclusion in early-stage investing. Go to sophiawomen.com and use promo code podcast10 to receive a 10% discount on all of our courses.
Can we go back to your next fund? You said the second one is not going to be done on a rolling basis. And I'm curious now, again, to get back to the same topic, now that you've built all this extra credibility on top of the 15 and 20 years that you've already done, how's the new fund different than the existing fund?
Well, first of all, I don't think the way that it's structured, specifically also on AngelList, is, and I'm going to be diplomatic here, there are some limitations certainly in the pricing realm.
Yep.
And also the model itself, even though it's been around for decades, there are a couple of well-established firms that have used this evergreen model for a while.
Yes.
It still is very new. And so when we're thinking about going into fund 2, where we're going to need to be talking to institutions and that type of thing, it's not the model for them. And we were well aware of that when we started at day one. Right. We knew that. So on the flip side of it, we aren't going to necessarily jump into a straight traditional fund model. One of my personal mottos, which we can chuckle about, but has some seriousness behind it, is like, we got to break things. Tanya and I were just talking about the struggles of raising as a woman first-time fund manager. Like, that's a real thing.
It is.
And we're dealing with women founders, like, who in the US get 2 to 3% of VC funding. Like, you got to break stuff. Right. Because that system is not functioning for us right now.
It's broken in so many ways. Sorry, go ahead.
It's broken in so many ways. Yeah. And so a couple of, as an example, a couple of the things that we would want to pull from this model are, and I actually tell emerging fund managers this now, you don't need to, who told you had to wait until you raise 20% of your fund to do your first close and start fundraising? Right. Yeah. No.
And start investing? No. Like, who said so?
Yes, that's what I mean. Yes, exactly. Start investing. Like, no, you don't have to do that. Close when you have $500K. Yeah. And invest it.
Make 10 investments or whatever. Yeah.
Exactly. And so, that's one of the things, right? And making, again, the flexibility that we've gotten out of the fund model, or the rolling fund, is great. So can we mimic that in some way? And then I think additionally is the way I'm thinking about expansion is much more of a network of funds as opposed to just a linear fund 1, fund 2. Right. We definitely want to expand internationally. That's actually the piece that excites me the most long term, is international growth, and doing it in a way where you can, for lack of a better term, I wish it were going to be this easy, but I'll use the word pop up a fund. Can
you teach me how to pop up a fund?
I know, seriously.
Give me a second. Just give me a second. I want to pop up a fund and then come back to the podcast.
We'll just pop up a fund. So, so that's kind of the goal as well, is to be a little bit more of a networked fund system. Yeah. And really use, really thinking about I do think in the last 2 years, there have been some very neat upgrades, innovations, et cetera, in the VC space in terms of models that we're definitely following.
Yeah. Can I ask you one question around just for laughs, really? When I was fundraising, speaking to investors, I had some really funny responses from people. And they still make me laugh. Like, even as I'm recalling this now in my head, it's making me laugh, like, because they were so absurd. Do you have any funny stories like that?
Oh God, can you give me an example of one of yours?
Okay.
I'm so interested.
So I can think of two that were quite funny. The first was that the guy liked my pitch, but that it sounded too superior with my British accent.
Wow.
Yeah.
Wow.
So I might want to consider someone else delivering the pitch who doesn't sound so snooty.
Wow.
Was the word.
That's awesome.
Wow.
So that was one. So from
I
then
have
on,
not gotten that. That is a particular level of absurdity.
Yeah, that's absurd, right? And then the second one that springs to mind, and I have many, I think, but the second one that springs to mind is someone said, well, why would you just invest into women? It's very off-putting. And
interesting.
Yeah. And at that point, I just realized that there was little to no point in even continuing that conversation or even answering why I might want to consider investing into women. So like there's just, and I just chuckle at some of those things. And there's been a few other things like being asked out on a date.
Oh gosh.
That kind of stuff. So do you have anything like that?
Yeah. Well, yeah, nothing quite like that. But I will say we've had a couple that really are just funny because they're glimpses into people's financial priorities. Like we've had one woman who she said to try her next year, but she said, well, I'm really sorry. I can't do it right now. I've got to buy a horse. You're just like, oh, okay. All right. Someone else had to buy a beach home. So it's that type of thing. And we're like, okay, like I guess that's fine. And they're humorous because it's, the interesting, which I chalk up to being a really lazy excuse, is we had one fund to fund that we were looking at that gave us, and we got like decently into due diligence, and we thought we got decently into due diligence, and they came back and they said, oh, we're going to pass on this. We are really looking for exposure on the East Coast and heavy on fintech. And I literally was like, our portfolio right now, this was a couple of months ago, and even still now, we have like 4 East Coast, 3 of them in fintech. And we're like, you just didn't even, like, you did not even look at anything. like at least if you're going to say no, my gosh, do a little research before you say no, because now you just look, idiotic.
Yeah.
So that was one kind of, chuckle, but the rest of it's a little bit more, the rest of the no's that we got are just a little bit more, we thought, the ones that are most frustrating are the ones where you really thought that was a yes. And in some cases they even said yes. And then they just like turned on a dime. Those are probably the most frustrating ones.
Yeah. Because you thought you were done, but you weren't.
Yeah. Yep. And, usually it's honestly for some really boring reason in that they just shifted priorities or some other investment opportunity popped up and that type of thing. But yeah, those have probably been the more frustrating ones.
Yeah.
Can I just get back to this idea of breaking rules, if you don't mind?
Oh, certainly. We can talk about that.
Well, because in other words, if they don't want to let you in the game anyway,
right?
Shouldn't you make up your own rules regardless? And if you just objectively look at VC, male, female, black, white, green, blue, it doesn't matter to me. It's broken anyway, in the sense that nobody needs a $2 billion fund unless you just want to take 2% of $2 billion to fund a nice lifestyle.
Right.
Or bigger offices, right? And I'm very serious. I've done a lot of work on this, right? It's the same as the hedge fund business. Like it can't be big enough.
Right.
But if you're going to break the rules, why not just break it and restructure this in a way that fits you and your investment style and your LP's investment style? It has nothing to do with what already exists and which we already consider as broken. Does that make sense?
Yeah, I couldn't agree more. And I draw a parallel to what I talk about with founders a lot, which is, and a little bit of this is a repeat, but when you're, especially in the US, we've had decades of like, VC is your golden egg. You don't do you don't bootstrap, you don't get loans.
Right.
Like if you have this certain type of company, the only thing you can do is go get VC funding. But when you look at the founders that we're dealing with who have access to less than 3% and in some cases less than 1%,
right?
Latina, Black women, that type of thing. That alone, that golden egg pathway literally doesn't work.
Right.
And so you have to go out and really think about how you are going to structure resourcing your company in a much different way. And it's really great. These models have become a little bit more flush in the past, 5 or so years, equity crowdfunding, various levels of debt-based funding. And so like, if you kind of draw that parallel too, that's a similar thing that kind of needs to happen in the VC space, is building a capital vehicle that is going to work the best for what you want to do. And it doesn't necessarily mean this thing that's existed for several decades in this one way.
Yeah, particularly because the entire financial system in the past 5 to 7 years has completely been turned upside down in so many ways.
Exactly.
That there's no reason to use. Yeah, in so many ways, right? There's no reason to use whatever the existing model is. Just make one from scratch, I think.
Right. Right. And you were talking too about these big funds, and like even just having a big fund, one of the big so-called prohibitive factors that they have is they just don't even want to write out small checks, right? So they're missing all of these early stage companies or investing into smaller funds just because the economics of the size of their fund kind of dictates that it doesn't make any sense for them to be doing that. Right. And like, that's where you're sort of like, geez, you're just like, it's like a whole swath of opportunity that, and you're starting to see it with a couple of these large firms are literally in this particular regard, which annoys the heck out of me, literally popping up. Seed stage funds. Yeah,
because what they're doing is they're taking a slice out of their big fund and saying, let's do a seed stage fund so we can take more risk and then we can add on because we've got $2 billion in this other fund, right? Exactly.
So yes, and you're starting to see that a little bit more. But yes, it is a broken industry, and I'm excited. I'm excited for some of the innovation possibilities in it.
Yeah, I think they're endless. Actually, I look at this every single day, so I'm excited.
Cool. I'm excited now to go back to some of your other podcasts and dig around now. This is like very interesting to me. I love it.
I have so many questions. You're going to come back on in 6 months' time when we're.
Oh my God, I totally will.
Good. Excellent. Thank you so much, Kate. We really enjoyed having you.
Thank you both. This has been such a good conversation. And I gotta say, I also really appreciate digging into some of that earlier stuff around kind of the progress of the movement and that type of thing, because it's really important. And I think it's forgotten.
It is
a lot. It's forgotten. Yeah. And especially because people want and expect these things to change overnight. And I am sometimes that like arbiter of truth, which is like, listen, we've got decades. It's been decades and we still have decades, and you got to brace up, and that's important to think about it that way.
Yeah, one of my favorite sayings is everyone's an overnight success 10 years later. And that's one of the reasons why I love the fact that you've been doing this for 20 something years, because people, and I wanted to ask you this, and you don't have to answer, but I love this idea. people will say, oh, and here's Kate Brodock, who's just started this female-focused fund. You're like, I've been at this for 20-something years. Leave me alone, right?
Yeah. No, it's something that I do, and both Allison, because Allison's got 10 to 15 years in it too. Right. And it's something that we do try to put pretty forward in our conversation, because it can sometimes be difficult these days to make that distinction. And we do think it's a pretty decent strength, and it's not common at all.
No.
So yeah, I do. And that is not, I am not saying that at all as a negative towards the amazing other people, most of them great colleagues and friends who are doing this good work now. It's so important to get more people involved in it 100%. But yeah, it's, the full scope of what I think I am able to confidently say that I'm proud of the full scope of my experience and how it is able to inform what I'm doing right now.
I think that's a great way to end.
Awesome.
Thanks, Kate.
Thank you both. This has been one of the most delightful conversations I've had. I really appreciate you having me on.
Oh, thank you. That's really nice to hear. We hope you have enjoyed this episode of the Money Makers podcast, brought to you by Sophia, the education platform for women that increases diversity in early stage investing. Visit sophiawomen.com and use promo code podcast10 to receive a 10% discount on all our courses. Learn, invest, and change the world.